All right. The last week, the report for the April jobs growth came out, and it stunned economists. The projection was there would be about 1 million new jobs created. I mean, all this government money coming in, 1 million new jobs, and we would see unemployment drop to, I think, about 5.8 or maybe less. Well, what happened is that we only saw about 266,000 jobs created, and unemployment went up to 6.1%. So the president, addressing this yesterday, this is what he had to say in part about the jobs report.
This month's job numbers show we're on the right track. We still have a long way to go. As I said, my laser focus is on growing the nation's economy and creating jobs. My laser focus is on vaccinating our nation, and we're making continued progress. My laser focus is on one more thing: making sure working people in this country, hard-working people, are no longer left out in the cold. They're going to get a share of the benefits of a rising economy. It's been a long time since that happened.
So we're on the right track. We're not creating jobs. Unemployment is going up. We're on the right track. But the question is, are we headed in the right direction? Joining me now to talk about this is Dan Celia, President and CEO of Financial Issues Stewardship Ministries. He also is the host of Financial Issues. We're still getting connected with him. He's going to be joining us. How in the world can you describe this as being on the right track? I mean, in what parallel universe? And the media continues just to play along with the president. Now, of course, his team is out spinning this, that, it's not the president's policies. I want to play another clip, clip 4. This is from the White House press conference yesterday with the White House press secretary, Jen Psaki.
We don't see much evidence that the extra unemployment insurance is a major driver in people not rejoining the workforce. We actually see the data and our analysis shows that lack of vaccination, the lower rate, which is why I referred to the data and the week that it was taken, it has an impact. Childcare has an impact. Schools reopening has an impact.
We talked about this yesterday, but growing evidence to suggest that these very generous extended unemployment benefits are competing with the marketplace, that rather than going back to work, people are taking advantage of this, very generous largesse coming from the government. I mean, look, it makes sense. I mean, this is not rocket science. It's just the fact that if you're paying someone more money to stay at home than to work, it makes sense that they would stay home. So we've got Dan Celia now. Dan Celia, as I mentioned, is President, CEO of Financial Issues Stewardship, and he also hosts Financial Issues, a radio program that's on about 660 stations. Dan, welcome back to Washington Watch.
You just hit the nail on the head. We got to get people back to work.
Well, I want to go back to the president yesterday in his statement saying that I've looked at these jobs numbers and shows us that we're on the right track. I mean, we're on the right track, but are we headed in the right direction?
Well, no, we're not headed in the right direction. I would even argue that we may be on a track. Certainly is not the right track. And we've got a long way to go to get on the right track. And unfortunately, to me, it seems inevitable that we're not going to get there. We are seeing Fed presidents, St. Louis Fed, Boston Fed, Druckenmiller, big analysts, all starting to reverse some of their stance, all things that I've been saying for the last 6 months that were going to happen in June. So I'm a little early here, but this is exactly what we should have expected, because we did nothing to incentivize those workers to go back. We have a record over 8 million job openings. We don't have any people that are willing to go back and fill the jobs. At the same time, you've got a president that's trying to hold up corporate America, saying, hey, look, you guys got to raise your wages and pay people more money. No, the government needs to stop paying people. We have people making $40,000 a year between the state and the federal government. I mean, it's insanity to expect people to go back to work, and we desperately need that. And it's not going to happen until we get some decent fiscal policy and get a government that understands that their job is not to create jobs. Their job is to create an environment by which the private sector is going to create jobs. And they're doing a horrible job at that.
Well, and then they blame the fear from the coronavirus. They said we got to get more people vaccinated. But if you go back last week to the president's speech to the joint session of Congress, which every member of Congress has been vaccinated, but yet they could only have 200 people in the House chamber that seats 1,700 out of fear of the virus. So they're talking out of both sides of their mouth or both sides of their mask. They're not being straight with the American people.
Well, they got to keep the fear on. They have to keep the fear on. It is the fear that's allowing them to add $5 trillion worth of debt. It is all about the fear because nobody is questioning them. They're just, everybody is letting this far left agenda just run wild. And yes, they are trying to change the narrative globally. Excuse me. Globally, we see the IMF and others talking about global warming. They're trying to shift the fear to global warming. They got to keep a sense of fear on, or they're not going to get anything accomplished for their agenda. Not accomplished for America, not an accomplishment for the American worker, not accomplishment for American manufacturing, American business, not those kinds of accomplishments. Accomplishment to fulfill and complete their agenda. And so, yeah, they've got a vaccine that's not a vaccine. So the FDA won't approve it as a vaccine. So the non-vaccine, everybody got, and obviously they know it's not a real vaccine, or they would have filled Congress. So it's just, the whole thing is insanity. And they desperately need to keep that fear play on, and they're not trying to do anything. I don't believe they want to do anything for the real fundamentals of the economy.
Dan, Celia, I'm not an advocate of fear, but there are some real things that we should fear, so to speak.
Yes.
I be concerned about, I should say. And I'm not, by any means, I'm not an economic wizard. I don't understand all of that, but I did pass my economics courses in college. And with all of this money that's being pumped into the economy it's just being thrown into the economy, nothing necessarily attached to it. I mean, I would have to think that we're in line for some significant inflation.
It has to be, Tony. It has to be. It's not a question. It is a little bit of a question as when, but it's already, creeping in. And the Federal Reserve, I guess, like the Ben Bernanke era, believes that they are going to control that inflation. They're not going to do it because they're not going to step in until it's too late. And what's going to happen is business sentiment, forget consumer sentiment, business sentiment is going to erode dramatically. And we're going to end in a spiral downward with a massive amount of debt. We don't have enough income now coming into the government, tax revenue to pay anywhere near for the debt they've created. And that's only going to be going down to exacerbate the problem. And we're going to have interest rates organically, whether the Fed raises them or not, interest rates are going up. We saw the 10-year hit 1.675. So nobody's raising rates. They're organically going up. That's what happens. And this week's going to be interesting because by Thursday, we're going to have some real inflation numbers and we'll see what happens. We're going to see 1%, 3% inflation by the end of the year, another 1% added to what we have at least.
So Dan, Celia, a lot of people look at the stock market. That's the only number they look at. The stock market is really going good, but that's only because interest rates are so low right now. I mean, I think that's a false sense of security in looking at the stock market. Am I wrong or am I right?
No, you're right, Tony, and that's exactly what has happened. But listen, it happened for 8 years during the Obama administration. We had zero growth. They were proclaiming growth, but the only president in the world that presided over less than 2% GDP growth for 8 straight years. That hasn't happened for 3 straight years ever. So, we don't have growth. We're not going to have it. We didn't in the Obama years. We just have market gain. And market gain is already overvalued. It has to correct. The reason it didn't correct when President Trump came in is because he immediately started a pro-growth agenda, pro-corporate America agenda. And it changed dramatically the trajectory of where we were headed. So valuations and earnings of companies went up. So their valuations went down or got in line. So we had a correction. It was just a healthy correction. People didn't even realize it was happening, but it was because the valuations were being calculated on was going up. That was created by the administration. There's no ifs, ands, or buts about it. And we have just the opposite going on now at the worst possible time.
All right, Dan, Celia, I want to shift gears a little bit because, look, I think we got to talk reality, and I'm concerned with what I see with the economy, with the policies, the spending coming out of this administration. I mean, I think even my 13-year-old, we were listening to the president's speech to the joint session, and he turned to me at one point halfway through and he said, "Dad, who's going to pay for all that?" I mean, even he gets it, that you can't spend all this money. Someone has to pay for it. So we've established that. Now I want to transition, Dan, Celia, to, all right, what do we need to be doing? What does the families of America who are trying to live responsibly, what do they need to be doing to prepare themselves for what we may soon be seeing?
Yeah. Well, the best thing they can do is they need to be working real hard to get out of debt. It's critically important. If you didn't think much of it before, you think the money is just going to continue to flow, everything's going to be there. The greatest protection you can have for your family is to minimize your debt as much as you possibly can. And you need to be working hard on that. That's number one. Other than that, you've got to build savings, and you got to build just real life savings. There's no alternative. Every day, somebody asks me, what are we going to do? How do we survive this? If we have a real crash, the kind that we probably deserve, if this all comes tumbling down, remember, we're going to be 30 trillion in debt in just a few short months, it seems. And we've got a Federal Reserve that's got a $14 trillion of debt by my count, and adding $1 trillion every 10 months to that debt. Something has to give. And the only thing we can do to prepare is to try to, again, live within our means and pay our debt down. There is concern about massive deflation in our currency. But the other side of that is there's massive deflation going on in everybody else's currency. So that is going to help our currency look a little bit better. That might help us. But we've got a Eurozone that's been in a depression for going on 18 months, first quarter this year, in recession as well. So look, it is the only thing we can do is work to get rid of our debt, live within our means. It's not a time to be spending just because everybody else is spending. You've got to just hunker down a little bit like they did in 2009, 10, and 11. Consumers were not spending because they didn't know what was around the corner. Same deal right now. You just have to hoard a little bit. I hate to say that because nobody, no economist or analyst would say that right now because they understand that that's the worst thing for the markets. I don't really care about the markets. I'm worried about the economy. And for the first time in the Trump years, we had a market that was actually driven by the economy the way it's supposed to be. We haven't had that for the 10 years prior to that. And we're losing it again now. So we have got to just, I hate to say it, but we've got to be extremely cautious and hunker down a little bit and don't try the whole, get rich. The market's just going to keep going.
I think that's good advice really on any day. Live within your means.
Amen.
Get rid of your debt. Dan, Celia, always great to talk with you. Thanks so much for joining us today.
Thank you, Tony. Great to be with you.